Ontario's housing outlook for 2023 is all going to depend on location, according to a new report by Desjardins. In Canada as a whole, we've seen existing home sales and average prices fall sharply from their pandemic peaks, mostly due to the aggressive interest rate hikes that we've seen from the Bank of Canada to combat inflation. But in recent months, we've actually seen the pace of correction actually come to a slow. And in this report, they believe that the bottom will hit by the second half of 2023. A change in the Canadian real estate market will most likely come from rate cuts from the Bank of Canada, as well as a very tight labor market, elevated household savings, and the high levels of immigration that we're seeing in Canada today. During the heightened market that we saw in 2021 and 2022, we saw the GTA have a rapid growth in pricing, but that didn't even compare to some of the cities outside of Toronto that we saw. During the lockdowns, we saw the desire for more space when working from home, and we saw Ontarians fleeing the city for that reason. We started to see communities way outside Toronto double in pricing. Places like Windsor, Muskoka and Haliburton, Bancroft, Parry Sound all doubled in price from 2019 to the peak of the market. Since the peak of the market, a lot of these communities have seen big declines, 25% plus, but it still is way above that pre-pandemic level. With affordability eroding in Ontario, and not just in the GTA, but other cities as well, such as London, Ontario, St. Catharines, and Hamilton, this has forced people to actually leave the province altogether and look at other places like Alberta or even out east in places like Halifax. The population outflow that we're seeing from Ontario is really just making the other provinces more unaffordable, but you would think that this would make Ontario more affordable with people leaving, but that is not the case because of international migration that we're seeing into Ontario. It's actually bumping up those prices because these people need somewhere to live as well. Canada's housing market will most likely continue to correct, and while many analysts always look at Toronto since it's the biggest city in Canada, we also need to look at these other smaller micro markets to really understand the picture of Ontario. Many smaller centers and cities within Ontario that saw the biggest gains during the pandemic will most likely see the biggest declines during this downturn within the Canadian real estate market. But that being said, affordability across the province will most likely stay stretched as we face this supply issue. With the acceleration of the population growth that we see, as well as most newcomers coming to Ontario and BC, and the easing of construction starts, policymakers are going to have a really tough time making their promise on affordable housing within this province. In this report, they actually estimate that housing starts would have to increase by 100,000 nationally per year on average in 2023 and 2024 just to offset the price gains amid rising immigration. I found this report to be really informative, so if you want to read the whole report, I will link it down below in the description. But my name is Cortez Ranieri. I'm a sales representative here in Oakville, Burlington, and Hamilton. And if you want to work with me in those areas, or you just want to have a chat about real estate, my email will be down below in the description as well. Please consider liking and subscribing if you found value on this channel, and I hope to see you soon.